What's up, everybody? Welcome to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. So today we're going over the market trends for Phoenix here in October. Can you believe it's October already? The weather's starting to turn. I can feel it. I'm super excited for the weather to change because it's been hot. It's been a hot summer. So I know this weekend, I think it's, we're in mid-October, so I think it's supposed to be in like the 70s this weekend. But then I'll go back up in the 80s and stuff. And I'm like, okay, I'm just ready for this weather. So I'm sure you are too. So we'll talk about a lot of different things. So we'll talk about interest rates. We'll talk about where the market trends are. And there's some changes and things that are churning, things I've been talking about for a while. If you haven't already subscribed to the channel, you can always find this on, I almost said Instagram. Oh, my word. You can follow me on Instagram, I guess. But no, you can find this on Spotify. You can watch it on Spotify and YouTube. You can listen to it on Spotify and Apple Podcasts. So feel free to look at that. Like the videos, comment. I'm always loving the comments I get from some of you guys, so appreciate it. So anyway, we're going to talk through things. Let me move some stuff on my computer right here. So where do we always start is how many homes are on the market, right? And last time we talked, we were just over 19,000. So we got to remember 25,000-ish. It's not necessarily a hard number, but 25,000-ish. Probably used to be 30,000 now. It's probably more like 25,000 is the average market, like where there's no advantage to buyer or seller, just an average market when it's steady like that. So we haven't seen that in a long, long time. Closest we got, I believe, was 2022. It was either the end of 22 or the end of 23. I think it was the end of 22. We got to like 21,000, and then we went right back down to like 13,000 because interest rates dropped for a little bit, so people went back in the market, and it was crazy. So we haven't been there for a while. We got to 19, which we were at 17 for a while, and then we got up to 19 last month. This month, we are just shy of 21,000. So we've gone up almost 2,000 homes in a month. And what does that mean? Does that mean that tons more listings have come on? No, we've seen listings actually stay about the same in how many are coming on, but buyers' demand has waned. And there's a couple different reasons for that. The economy, first and foremost, things are expensive. With inflation, we haven't had any deflation. Inflation's starting to look better. I believe inflation's slowly come down. We're in the twos now. And so it's one of those that it's getting back to more acceptable levels, but that still means that things are increasing. Things aren't getting cheaper. They're continuing to get more expensive still with inflation. So it's one of those, at least they're curbing in the inflation, but then obviously there was job reports where, they may not have said the right numbers. There was wrong numbers, all this stuff, where the economy's not as good as we think it is. And companies right now are laying off. I think who was it? I just heard a company today. Was it Boeing or I don't remember. I don't remember who it was. So there was a company that said they're going to lay off like 17,000 people. So companies are continuing to lay off people, which for me, I think the economy's not as good as we think it is. It's an election year. That's another reason why people aren't buying and selling. It's an election year. So election year economy and interest rates are high. And we'll talk about that here in a second. But we've gained volume. And what that means is we're getting back to normal. And most markets right now are either buyer's markets or balanced markets. So if the homes are in buyer's markets, you can negotiate more. So it's one of those that something to be paying attention to. I tell people when there is a buyer's market, that is the time to buy. That's why it's called a buyer's market, because you have the advantage. So it's one of those that if you are sitting on the fence, we might need to have a conversation, because buyer's markets is the time where you can get the most out of it, because once it starts shifting back towards a balanced / seller's market, prices start going up. You want to catch that equity before. Anyway, so all those homes are starting to come back on. So right now, where are interest rates? So interest rates are at 6.68%. What? And we were all surprised by this. So the Fed announced, and obviously I did talk about this last time. Interest rates, I did a video on do interest rates move with the Fed? And I didn't expound on everything. I probably should have. Interest rates, mortgage interest rates don't follow the Fed. So when the Fed says they're cutting, doesn't mean that mortgage interest rates are going to. Now, typically, and that is because mortgage interest rates are based not on the Fed, but based on the 10-year Treasury. So being based on the 10-year Treasury, they don't follow the Fed in that sense. They're already, and I did say this in the video, they do kind of bake it in ahead of time. They're anticipating what the Fed's going to do. So that's why they typically make moves. Well, the 10-year Treasury went up, so interest rates went up. And so like a week or so ago, we were at 6.25% interest rates. We were coming down. It was great. And then all of a sudden we jumped right up to 6.6. And we were like, what? And the 10-year Treasury went up. And there's a lot of different reasons for that. I'm not going to go into that because I'm not an expert on it, okay? I don't know enough about that. But there's a lot of different factors with the 10-year Treasury. So It's one of those that went up. And so I would imagine interest rates are going to come down again, because obviously the Fed's going to cut rates. They're going to start baking it in eventually. So interest rates are going to start coming down. But I thought we might be in the high fives by the end of the year. I don't think that's going to happen now, unless they make some massive cuts with the 10-year Treasury. I don't see it. We'll probably be in the sixes still, and then next year we'll hopefully get into the fives. So that was unexpected. I talked to lenders. I talked to a lot of people. We were all caught off guard by that. We didn't expect it to go up like that. So that was a little off. And I'm still trying to read through exactly how it has to do with the jobs market and with some of those different numbers. So that's where that's coming from. So that's going to impact people. That's going to slow people down, because pretty much what they've seen, I've seen some stats where they're saying once we get around 5.75, that's when people start coming back in the market, sellers and buyers, 5.75%. Right now, I think FHA-VA is at like 6.2. When we were at 6.2 for conventional, FHA-VA were at like 5.75. We were starting to see a little bit of traction, but then it died down because interest rates jumped. So, and plus we're within 30 days of the election, so people are going to feel very wary about what to do. We need to see what happens. So I'm hoping once the election gets over and, people kind of see what's happening, barring something crazy happening, that people will start acting normally, start moving stuff towards the end of the year. Show you this graph from Cromford report, which I pay for, showing the market. Again, 90 to 110 is a balanced market. Anything below 90 is a buyer's market. Anything above 110 is a seller's market. Right now, again, I've always said this. I think this is a couple weeks behind typically. I think anything under 120 is a balanced market. 190 to 120 is a balanced market. So it's one of those that we've seen a lot of those come down. You can see all those red numbers. That means they're dropping in demand and dropping in what movement's happening. We're moving into a balanced market, which is good. It's good for buyers, maybe not as good for sellers, because sellers want to get more money, but it's good overall for the real estate market. But normally, if interest rates start coming down, we're going to start seeing demand pick up, and then we're probably going to move some of these homes that are down here in the buyer's market. They're probably going to start moving up into the balanced market. So again, if you're waiting to buy, let's have a conversation, because we need to start talking about this now. We need to start game planning now. But yeah, then there's an interesting article I'll share as well about the Fed rate cuts compared to like the 10-year Treasury. I'll share that in the notes, so that way you guys can see it. One thing I would encourage, if you guys do have questions about anything with real estate or something you're interested in, whatever, let me know. I'd love to be able to answer questions and do some of that stuff. But if you're thinking about buying, you're thinking about selling, you're not sure when's a good time, again, you can't time the market. But if you're thinking about doing one of those things, let's have a conversation. Let's strategize what's best for you. Let's work on what's best for you. And whether it's now, whether it's later, whatever it is, let's have that conversation. My information's below. I'd love to connect with you. I'd love to talk through everything with you. Again, real estate through relationships is how I run my business, because I try to put my clients first and do what I can, because I work by referral only. So I want to do such a great job for people that they will refer me to everybody. That's what I try to do. I try to help. Guys, I really appreciate you listening to Real Talk Real Estate. I'll catch you next time.